Okay, so good evening everyone, and welcome. I'm just doing all the sound checks, camera checks, I'm doing all this different stuff, so welcome. And first of all, let me do a sound check just to make sure that everybody can hear me. So if you can hear me, please just say yes, hello, whatever, type it into the questions box. I'd love for this to be as interactive as possible. And recognizing some of the names, so Stephen, I'm spotting you there, and great, cool. So, normally when you do this, we don't usually use a camera, but I actually thought tonight, Oren and I decided that actually if you can see my face and it's a real thing, you know, I'm a real person, and so you can see that. So just bear with me, I'm in quarantine mode. But yeah, cool, fantastic. Okay, great. So gents, ladies and gents, I just gotta remember not to pick my nose or do anything like that. So yeah. So first of all, welcome everyone. Welcome to tonight's topic, which is becoming a day trader. All right, the formula for success, and it's sponsored by Trades 360, and it's kind of brought to you by Traders Expert and Forex Live. My name is Adam Harris. I'm one of the analysts with Trade with Precision. I'm also a fund trader. So I know what's normally happening. I'm watching it here. I can kind of see you logging in. So I know that people are still joining us. So that's fantastic. And actually, Oren, if I can just ask you, if I do happen to run over by 5 or 10 minutes, is that an issue? If the Q&A carries on a bit longer, let me know if you need me to end exactly on time. But if you don't mind me running over, that's a real distinct possibility. And let me know if that's okay. I really want, excellent. I want this to be as interactive as possible, please. And with the number of people that we have, it's possible that there'll be a lot of questions, and I want to make sure that I get through everybody's questions. So again, welcome to today's topic. I've got a few disclaimers that I need to give you a moment to view that. And while you're reading that, I'll tell you a little bit about myself. So I've been a professional trader since 2014, 2013, probably starting to learn how to trade in 2008. So I'll tell you a little bit about myself as we go, 2009. And I'm based in the City of London. I'm a trend-based trader. I'm a technical trader, and I trade for 2 regulated funds in the UK. So, but I think the key thing is to let you know I'm a trend-based trader, and I am trading any market, any time frame, and I'm going to demonstrate that to you as we go through. In other words, what I want for you by the end of the session is to have a very clear understanding of what real practical day-to-day trading is supposed to be like. It is meant to be rational. It is meant to be evidence-based. It is a learnable skill. There's no mysticism. There's no voodoo. This is a real learnable skill, and I want you to have a sense of, okay, I get what I need to do to kind of go in the direction I want to go. And that's really a big part of it, is this is meant to be kind of I'm bringing you solutions rather than more problems. So on the agenda, we're going to talk about the trader's journey. This is the path to trading success. We're going to be obviously point 2 being on the path to trading success is taking that road, the road less traveled, why most trading strategies fail and how to prevent yours from failing too. And of course, becoming a day trader, a live look at the Trade 360 trading platform, which has got a very important feature, which is why I want you to see it. I want you to pay attention to it. And just watching the numbers. The numbers are going to continue to climb. In other words, more and more people are going to join the webinar as we go. And so I expect probably everyone will be in by about 10 minutes into the webinar. This is just coming from experience. So let's kick off. Okay, so we'll start off on the trader's journey. And in fact, actually, before we do that, let me kind of just, I was going to show you something as well, which is I've grabbed, it's a screen grab from one of the regulated, signed off regulated returns of mine. This is technical trading, and I wanted to show you here. I'm getting the updated version, which will update the last kind of the gap that's missing. But I wanted to show you kind of my returns over the last kind of 5 years. And this is using between 0.2% and 0.5% per trade. I started off risking more initially, and of course the returns are higher, but the problem with it was that I found it incredibly stressful, and it's also for clients was more for me, but clients also prefer the kind of steady kind of thing. You don't want to see your account up 1% one day and then down 1% the next day. It's a little bit too volatile. So I kind of learned over time where my comfort zone is, and I wanted to kind of show you that. So I want you to see real results, but I also want you to get a sense of like what is trading actually about. So there are 2 typical paths in trading. Obviously, history has shown us that typically a trader will take one of 2 paths: the trader's path of failure, or the path kind of to trading success. All right, so the aim of this webinar is, first of all, to prevent you from stepping onto the path of failure. And obviously, if you're already on it, to help you identify that you are on it and show you how to get off it, and then help you onto the path to successful trading and ensure that you stay on it. I was just smiling there a little bit because, you know, trading, man, it's almost more about learning what not to do than it is about what to do. We have funny ideas that we get in our head that's also fed to us through ridiculous stuff out there. And we have to learn how to trim it away. And so you'll figure this out as you go, but it is a lot more about learning what not to do. Trading well, ladies and gentlemen, remember this, trading well is about doing the basic things really well, as opposed to complexity. A lot of people think that it's more about complexity. So this is being recorded in answer to your questions. I'm going to keep an eye on the questions as we go. This is being recorded. It's up to the hosts to decide whether it goes out to you afterwards, but it is being recorded, and I'll check with that as well. Okay, so sometimes there's a follow-up email and you get access to the recording. Okay, don't hold me to that. We'll see how that goes. So again, first of all, welcome to any of the folks who already know me. It's nice to have you kind of here. So because we don't get to see each other face to face anymore because of coronavirus. That is what it is. And I do think today is one of the best times to learn how to trade. And I'll give you a very brief explanation as to why. When I got started, for one thing, you had to pay separately for your charting package. So I used to spend somewhere between 100 and 300 bucks a month just for my charting package, separate from my brokerage account. The spreads were higher, the fees were higher. And so whereas today, everything is accessible from your phone, you can trade on your phone, and the costs are almost nothing by comparison to what they used to be. And the markets have grown. So now you have binaries and you have cryptos, we just have more choice. And so and of course the technology has got better. And I also think it's better regulated. So I just think that it's the best it's ever been. Okay, so this is really kind of, let's kick off and let's kind of get going on this. The path of failure. Okay. So, and I'm not fear-mongering here. What I want to do is describe a scenario that you can relate to so that I can kind of then describe kind of where we should be, okay? And absolutely, I'm very aware. I still remember what it was like trying to figure all of this out. This is my second career. I was in the film business. I sold my shares. I'm in the UK now, and this is my second career. So I'm aware of the struggles and the difficulties, and I promise you this is one thing I can honestly say, is that nobody finds trading easy. It is a difficult initially. The reason they don't find it easy is because the education can be very bad. A lot of the education out there isn't that great. And a lot of the bad ideas are spread out there outside of the education. So it's not that if you find the right education and it's done, it is easier, relatively speaking. And then you get to a point where it is easy. But you've got to think about it much more like trying to learn a professional sport or a musical instrument or a foreign language. And that's a better way to have an understanding of what the expectation is as to how much effort is involved. But is it a learnable skill? It is. Is it super easy for some people and not for others? Not at all. Everybody has the initial hurdles they have to work their way through. These are just universal experiences we have to work our way through. But having someone you can lean on is really what you need. You need someone who's objectively capable of doing it. So Trader Bob needs more income and he hears about trading, or he or she. Obviously, this is based on he, but it applies equally to both men and women, so no offense to anyone. He buys a book on technical analysis, learns about OHLC bars, open, high, low, close bars, trend lines, support and resistance, double tops and bottoms, for example. He believes he's discovered the Holy Grail. Okay, so this could be me. This could absolutely be me. He starts trading and he loses most of his capital within 2 months. Now, funny enough, almost all of the bad stories you hear about can come down to education, lack of education or bad education, because you can't be a special ops soldier or a ninja, whatever, without training. It doesn't work that way. Trading is actually the same. You just can't go to a professional level without proper training. And part of that is managing your psychology. And unfortunately, let me explain why. Trading is attached to money, which is attached to our hopes and dreams and a better life and everything that can possibly come with it. And so there's more weighing on that and depending on that than anything else. So compared to any other career we might try or another skill we might try to do, the pressure behind it is far beyond anything else. And it also is a reflection on us. How hard we find it, we immediately attach how good we are at anything in life, our insecurities and all that. So all of that is attached to it. So you need to be aware of that. So you need a little bit of kind of, we need to gain confidence, but you need a bit of patience and understanding that you're undertaking something that's going to test your self-confidence and your self-doubt and get into your head. Bob rationalizes that by saying he doesn't have enough knowledge. So he tops up his trading account. So he's convinced he basically wants to keep practicing, but his training, his education hasn't really improved. So he attends a paid course where he's taught a strategy using candlesticks, for example. These are just examples. Candlesticks, Elliott wave, ascending and descending triangles. So once again, he's now convinced he's discovered the Holy Grail. Let's be honest, a lot of people are selling, you know where I'm going with this, a lot of people are selling this kind of thing. And there is some good education out there. So I'm going somewhere with this. I'm just trying to explain what everybody goes through, but I understand it. But the problem is here that nothing changes and the poor results continue. He yet again rationalizes by saying he still lacks knowledge and needs to learn more advanced techniques, so he tops up his trading account, finds several different experts who are willing to teach him the techniques of Gann, Fibonacci, pivot points, pitchforks, and Gartley patterns. So now we're heading towards complexity, because there's that belief that, well, if I haven't figured it out yet, then it's got to be, then the solution must be more complex. I've got to dig deeper into kind of go further into the abyss. So once again, he's hopeful and still the poor results continue. There's some good questions here. I will answer all your questions. I'm going to get to that in a moment. Okay, so I'll try to find the appropriate time to answer the question as soon as possible. So now he rationalizes by saying that his broker is the cause of his losses. Okay, so he closes his original brokerage account and he opens 3 more with different brokers. So surely this time. So where we are today is the broker matters. The broker matters, but we've got to balance the two. We can't blame the broker for these kinds of scenarios. So of course, nothing changes, and finally Bob loses all of his capital and he gets disheartened and quits trading forever. So that could happen over a 2-year period, you know, and that's painful. And that's often the case. And this is brutal. I've been there. I mean, I can relate to most of this. I'll tell you a little bit about my journey as I went. I mean, I suppose I'll tell you about it again in the right moment. So taking the road that's kind of less traveled. So first of all, preparation. What type of trader are you? Which markets should you trade? And you need to master the basics. In your defense, or in our defense as beginner traders, we can't really know those sides about ourselves. We don't really know our risk profile yet. We have to find it out. And we don't really know what type of trader we are yet. We're going to have to find it out, and which markets we should trade. We don't really know that yet. You will find it out. You'll find it out relatively quickly, but we need to talk about that one. So then we've got to take action. So we need to master technical analysis. We need to, obviously we've got to understand risk and money management, trading psychology, and trading strategy. So I'm going to throw a little bit of something extra in here. I'm going to dump a whole lot of stuff that isn't necessarily on the slide deck here, kind of because I've got to brain dump a lot of stuff, and we're limited in terms of time. So trading is, by definition, is actually just execution. You're placing an order, you're hitting enter, you're closing, you're managing your trades, you're closing out your trades. That's all it really is. That's just trading. The skill that you have to master is technical analysis. So you might ask me, well, Adam, kind of why technical analysis instead of fundamental analysis? Okay. You can go away, and I'm confident you can independently verify this. But technical analysis, well, let's differentiate between investing and trading. We are talking about trading now. Trading is a shorter term activity. It's what is happening in the markets in the next few minutes, the next few hours, the next few days. Investing is a much longer term, more passive activity of looking for something that's going to achieve growth over a longer period of time. You might own the underlying stock. You might, and this is important, this is relevant to today. So let me digress away from this to cover this really important point with you. Okay, so trading is, I'll zoom in on that, don't worry, is not the same, okay, as investing. This is hugely important that most people understand this, because most people don't get this, or at least most people aren't told this. This is kind of important. I'll just pick a color, don't take it personally, it's just bright and it's easy to see. So imagine we're looking at a daily chart. Okay, the market's going up, trending up, then it's trending down, then it's kind of trending up, and then it's trending down, and then it kind of trends up. Doesn't matter what the market is. Let me tell you this: it doesn't matter what the market is. It doesn't matter what the time frame is. What matters more than anything else is what are the market conditions? What is the direction of the market? That's what matters. Okay, so an investor will look for an appropriate entry into a market of their choice. They'll then write out the good times and the bad and the good times and the bad, ideally achieving an increase in value over time. Okay, that's an investor. They may hold on to that forever. So that could be 6 months, 2 years, 5 years, it could be 20 years. They may own a portion of the underlying asset. It could be gold, it could be a commodity, it could be stocks, and they may never exit that position. If you're Warren Buffett, value investing, you will never exit that position. As long as it's yielding growth as well as dividends, there's no reason to exit that position. He wants to own it. There's no reason to get rid of that. That's investing. The good time and the bad times, you need the chart to go up over time. Very important. So fundamental analysis makes sense with stocks to a degree because you can define the figures. But when it comes to currencies, that's really tricky because you've now got to understand the fundamental analysis of a whole string of cogs of economics between two different countries, not just one, but two, because they offset each other. So Japan's policies, not just their policies, what are the traders in their central bank doing to offset to make sure they achieve their particular exchange rate with the US, who's one of the biggest trade? That's insane. You can't do that. Technical analysis is what is happening in the markets right now. And if you go away and independently verify this, you will find out that technical analysis is without a doubt the preferred method for shorter term activities. So what is a trader? So what is a trader? A trader goes, looks at the current market conditions, goes, they're trending upwards. I'm going to buy. I'm going to take some profit, take some profit, take some profit, put my stop loss here. I'm going to get kicked out the trade. Then I'm going to assess if there's another opportunity. I'm then going to get in. I'm going to buy, take some profit, get kicked out. The trend is now down. I am going to sell. I'm going to take some profit, get kicked out. They don't care why it's going up and why it's going down. They don't care. It doesn't matter. What matters is this the direction? Is it high probability that if I go in the same direction as the market now, that I'm going to be able to get money out of the market before the market takes money from me? I'll give you an example. Gold. My longer term analysis on gold over the next 6 months to the next 2 years is bullish. But right now, am I trading it? No, because it has no clear direction at the moment. I was shorting it a couple of weeks ago. Why? Well, because every market goes through an extension, retracement, extension, retracement, extension, retracement. And if that's on a monthly time frame, there are going to be some intraday opportunities here to short gold temporarily. So the trader can understand that temporarily there is a window here where they can short the market, even if their longer term opinion is to the upside. So the shorter term analysis is down, longer term is up. That's trading. The trader must make money by the end of the month. The goal is get in, take some profits, exit the position. Have a stop loss if it goes against you, take profit if it's going in your favor. It's a job. Investing is a luxury. Trading is a job. I've got to make money this way. So an answer to the one question is, how many trades should a trader have at any one time? I'm going to answer that question for you as best I can. At Trade with Precision, we think it's reasonable to have 2 to 5 trades per week. 2 to 5 trades per week as a minimum. It's realistic to find those across all the markets, ideally yielding a net 1% out of all those trades. So that's the goal, which would then compound towards 4 to 5% per month. The average annual return of the S&P over the last 10, 20, or 30 years, depending on which one you look at it, is between 7 and 14%. So your goal should just be to yield greater than 14%. That's what you're really looking to do. Okay. Bob doesn't cope well. Okay, so the next thing is, and I'll go back to the slides in a moment because I've got to keep an eye on the time. I said to you that the most important thing are the conditions. Doesn't matter what you're trading, but what does matter is what are the conditions. So the market on the daily, if the market conditions on the daily look like this, you've got a 65 to 75% chance of losing money in those conditions. We just stay away from that. Doesn't matter what it is. I don't care if you have a Barclays account and you love Barclays, or Tesla. I love Tesla, but if it's looking like that, I can't day trade it. I can't intraday trade it. There aren't any money-making opportunities there. There's money-losing opportunities, but not money-making opportunities there. But if it's trending in a nice, orderly fashion to the upside, and I decide to buy, I've got a high probability opportunity of making 1 or 2 or 3, on average, 3R, which is 3 times my risk. If it's trending down and I sell and I decide to trade with it, depending on whatever the requirements of my strategy, I've got a high probability of making more money in trading in line with that than I do of not. And so technical trading is incredibly appropriate for this. It's way better than fundamental analysis any day of the week. My returns that you see there, the sign-off returns, 0 fundamental analysis on that, 100% technical. I'm not saying don't use fundamental. I'm saying don't let the fundamentals that create a bias in your head that overrides what you are clearly seeing happening in the chart. And that's something I want all of you to think about. Ask yourself, how do I feel like, oh no, the euro has to crash, or the dollar is going to do this because of a trade war, because of Brexit, or gold has to do this because the world is going to crap and gold has to go up as a safe haven thing, and then gold's going down and you don't understand why. In those situations, you've allowed a bias to get in your head from stuff that's overriding what you can clearly see is happening in front of you. You're in denial. And this is one of the things that nails beginner traders over and over again. And it did it to me, and it doesn't. So once you realize that technical is about just going with what you see on the charts, which is hard to do because you've got to do it on faith in the beginning. And then once you do it, and the market actually does what it looked like it was going to do, then you start to go, actually, I'm going to try a bit more, and you do it enough, and eventually you go, you know what, I'm not going to listen to the news, because you need to think about this. Traders don't listen to the news. Business people don't listen to the news. I don't run a business. If I ran a little shop down the road, or even a successful business, I'm not chopping and changing my business plan based on what President Donald Trump says or what I see on Twitter. So most businesses are already having their plans, and they're not making any of the big decisions based on what they see on the news. So the news is not a primary driver of that. People will make their own decisions in isolation. So technical analysis mastery, trading strategy. A trading strategy, ladies and gentlemen, you want to write this down, is a written description of a visual pattern that occurs in the market that is much more likely to unfold in my favor than against me. I then need to understand risk and money management. If I'm not good with my risk or my money management or my trade management, I can actually make a losing trade, a winning trade, a losing trade. If I don't take profit, I can be in profit. It can go back and stop me out. Trading psychology. Okay. This is an important thing. The more you let the fundamentals get in your head, as an example, and the more it conflicts with what you see the market doing, the more it's messing with your head, or the more your confidence is down. Maybe someone you trust, whose opinion you value, says to you, who's not even a trader, who just goes, no, I'm going to buy cryptos and gold because it's going to do this. And then you see a downtrend of gold, but you decide not to sell because they've influenced your decision. That's all psychology stuff. So what happens is that over time, the more you start to trust, I'm going to push on technical analysis tonight, the more you trust in it, and the more the market subsequently starts to behave the way it should, the less psychology you're going to need, because we don't need as much when we trust ourselves, when our skill is there. But the longer we kind of let it get in our head, the longer it's going to take us to let go of that, and then the longer we're going to see that it works. So until you get to a point where you know it works, psychology is always going to be a big factor. Psychology is less of a factor for me now, and I'm lucky. I've taken thousands of trades with certain strategies, so I know that they work. But I can have a bad day where my confidence is down for some reason, and then that ridiculous old ghost gets in your head and says, are you sure you're good at this? And then you have to go, that's ridiculous. I've done this 1,000 times. It definitely works. And then you have to kind of bring yourself back up. And that's your job, no one else's. Record keeping, ladies and gentlemen, the 3 biggest things that you can do to leapfrog your trading forward. Keeping a journal, record keeping, which I'll talk about in a moment, mentoring, and where you get a feedback from a trader you trust who's demonstrated they can do what they say they can do, and backtesting, which is something that nobody really ever does, but they should. So preparation. So what type of trader are you? Which market should you trade? Master the basics. So traders often falsely believe that finding a successful strategy is all they need to be successful themselves. It's a starting point. It is a starting point. So what's more important? The golf clubs or the golfer, the guitar, the guitarist, the paintbrush or the artist, the scalpel or the surgeon? I mean, to a degree, obviously the tools, having decent tools, obviously matter. You wouldn't give a Formula One driver a terrible car, but we also know that a great golfer should be able to play better than another golfer, even with the average kit. So while we're talking about this, and I love the questions, I will not ignore a single question. Okay, if it's relevant, I'll go through it. So let me just do a temperature check. Is everyone with me so far? Is this vibing with you? Is this kind of making sense? Give me some feedback, please. So the tools of the trade are important, right? So, but they're just not the most important aspect of success. But I do want you to understand this, and you don't have to. I'm not selling on anything here. I'm saying take a bit of just to a degree, try and trust me on this one, that success in technical trading comes from doing the simple things really well. We'll talk about that as well. Then the more you start to invest in that and the more the results start to show themselves, the less psychology, less your head will mess with you, because you're starting to see real things starting to unfold in your mind. So trading is no different, right? A successful proven strategy in the hands of the wrong type of trader or an inexperienced trader will not guarantee success. I'm going to go back. I want to say something that's really important here. This is a learnable skill. Nobody finds it easy right out the gate. There are universal hurdles that we all have to work through, which includes the psychology aspect, getting used to the money aspect, all kinds of things, self-confidence. Everybody has to go through that. In fact, I would argue that the people that you might think from a distance, if you're in a training class and you see someone else over there and they're an accountant and they're super confident because their life always goes the way they expect it to, they're going to struggle. You're going to think they get it easy, and their ego is going to be a massive hurdle for them to overcome. And then you have somebody over there who, for argument's sake, is a hippie. I'm just going to use that term as a generalization. And they're like, oh, I'm just going to go with the flow. And then they actually seem to get the hang of it. It is an art and a science. And it's up to the individual to some degree. Imagine you're Neo from the Matrix. Now I feel like I'm going a bit wishy-washy, but you have to kind of free your mind to a degree to be able to be malleable. Okay, so you're like a surfer on the ocean. You are surfing waves that you can see, but you need to adapt. Although each wave is individually different, no waves are the same. It's like, I mean, then none of them are the same, and yet all waves are waves. You can surf one wave, you can surf the others, right? You can't go out there and the ocean is so flat, the market conditions are flat, there's nothing for you. Or if it's so stormy, you don't want to go out there, it's too dangerous. That's like market conditions. But if you get out there and you can identify a set of waves and you can swim, which is your risk aspect, then it's about timing. Get on that wave, make sure you can get on your board right out the wave. You don't expect the wave to take you all the way home. You know the wave's going to die. So you get off the wave and you go out and you catch the next wave. And then you do that until you've either had enough surfing for the day or you've run out of time or whatever. The market is the same. All I need you guys to do, and girls, is to identify waves in the market. Identify the trend, the market conditions, find the waves, find your entry, which is the strategy. Your strategy is timing. It's about entry. Where's your stop loss? Where do you take profits? At no point while you're riding waves out there on the ocean do you need to understand how the moon and the stars and the formation of the ground creates waves. You don't need to know that. You need to be able to identify. Is it safe for me to go out? Are there waves? Can I get on the wave? Can I get on my surfboard? That's what I want you to understand, the difference between technical and fundamental. But it's a learnable skill. Might be slightly easier for one person to get on the board. Maybe they can't swim as well. Maybe they do other things. But there are the universal hurdles we all have to go through. So this is important. This is not an exclusive club where you don't belong. This is not how it works. You belong when you put the effort in. The first steps a trader must take are: establish what type of trader you wish to be and which markets you'll trade. We'll talk about that in a moment. Gain the experience required in order to successfully trade a proven strategy. How does a trader gain the experience required in order to successfully trade a proven strategy? You must learn to trade. If there is a secret to trading, that's it. Okay, meaning it isn't just about learning the strategy. There is a learning part that you have to do. Learning any skill requires that you must master the basics. Master the basics. Can you imagine, and by the way, I'm not musical in any way, but I know about scales. I know about that stuff. Can you imagine trying to be a professional musician and deciding to skip that part of the basics? You can't do it. Yes, you get a Mozart, fine. So he was gifted and natural, but in our entire history, there's only a few people like that. And so as a general rule, they don't exist. Master price action and not some whiz-bang indicator or technique. I fear the man, and I was thinking about this today, right? So I fear the man, not the man who has practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times. This is Bruce Lee. And if you know anything about Bruce Lee, he was incredibly fluid and adaptive. he would have agreed with me in the sense of saying that it wasn't about complexity. Although he knew several different martial arts, he would have gone down to the really basic stuff. He would have focused more on the moment and speed and flexibility. But yeah, he would have agreed that if you take someone who's spent, so much time mastering one particular technique, they're more dangerous than someone who's tried 10,000 different techniques, because they wouldn't have mastered any one of them. There's a reason for that. Let me go back. I want to explain why that leads to success. When you focus on one strategy instead of jumping between strategies, what then subsequently happens is that your brain can now settle down and start to focus on the other things that you have to learn: price action, support resistance levels, and other things as well, and mastering the platform, placing your orders, managing your trade orders. But if you keep jumping between strategies, you still have to, at some point in your journey, you're going to have to progress on those other things, but you never can, because you're still chopping and changing. All right, so action. Technical analysis mastery requires knowing the elements of technical analysis so well that they become second nature. So we're going to talk about the key things that you must have, which I've already mentioned one of them. So optimal price action structure. What do money-making markets look like? I'm going to show you. I'm going to go to the platform and show you that. Trade with the trend. All right. Yes, I know counter trend strategies. I know them. I know range-based strategies. But in the end, and I want you to listen, remember what I'm about to say. You don't have to do it. You just have to remember what I'm about to say. When I decided to let go of trying to squeeze a trade out of a range-based market or counter trend trade, and what was left was just trending markets, what then happened was that I then only have to go looking for trending markets. Now they offer, basically, why would I do it? Because they offer the greatest average return on a trade. They offer the safest, relatively speaking, safest money-making opportunities, the least stressful money-making opportunities, and subsequently, less trading, more profit. Fewer trades, more profits. Lower risk, less stress. Alternatively, if I'm looking at euro dollar, I now have to look at the daily, the 4 hourly, the 1 hourly, the 30 minutes, because I'm looking on every single damn time frame, looking for a counter trend, range-based, trend-based entry opportunity, which is insane. So you end up spending 25 minutes on a single chart, terrified that you're going to miss out on a money-making opportunity, which just probably isn't there. And that's insane. And how often do you find yourself counter trend trading and stressing when you go to bed, you left the trade open, and you just know it's going to be stopped out when you wake up in the morning because you were going against the trend and the trend is strong. So don't just let it go. That's not the way to go. Then we talk about point number 3, proven support and resistance levels. Now, one thing I want you to keep in mind is that 100 years ago, so the Dow was running in 1896. It's been running for more than, so 115 years. Back then, you didn't have charts. You had price. So even back then, floor traders would notice that certain price numbers were significant on certain things. So I want you to understand that the most important information on any instrument that exists is starting with support and resistance levels. In other words, significant price levels. If you have that, and then you have price action, which is the candlesticks, that is the minimum requirements that a professional trader, in my opinion, can have and still make money. I can just trade with horizontal levels and price action. That's enough for me to do it. So you need to understand that until you get comfortable with just those two things, if you've got Bollinger Bands on, CCI, multiple indicators, you need to learn to be comfortable with just those two things. But if you're asking me, Adam, what are the things that I really need to be paying attention to? It's horizontal levels on the monthly, weekly, and daily, and price action. That's your basis for everything else. Okay, those are your two most important things over anything else that exists. Anything. Don't bring volume to the table. Don't bring MACD. Don't bring anything to the table. Those are the two most important factors. Then we have candlesticks and candlestick analysis, which is the individual signals within the story, and then how to read technical indicators, not indicators, sorry, such as MACD, CCI, RSI, stochastics, and so on and so forth. Only at this point should you even consider trying to construct or find a trading strategy. Okay, so I'm going to look at the questions quickly to see where we are, see how we're doing for time. Okay, Sorry, just seeing where we are in the story. Okay, we're doing okay. We're doing okay so far. So let me look at the questions. I love the fact that we've got folks from all over the world, by the way. So I'm in London at the moment, but I see, we've got everyone all over the place. So I'm going to talk about multiple markets here. I really want to do that for a reason, but there's a special thing that I want to talk about, which is unique to this platform. Okay, and I'll get to that in a moment. So if you find, and this is just banter, but if you find you're taking 50 trades a day, you're probably trading too much, and you're probably too stressed. 2 to 5 trades per day, when I say that, is a minimum requirement, which we feel is meaning that all I have to do is look across, there's 27 major currency pairs, 40 odd commodities, 7 or 8 different indices, maybe 10 indices if I got the US indices, foreign indices, and then a few stocks. Okay, there's commodities, there's bonds, there's various other things. And all I need to do is find even one really good trend. I might be able to get my 2 to 5 trades out of that. So what I'm trying to do there, ladies and gentlemen, is unburden you, remove the pressure to do that, to find stuff. Less is more. If you find a good opportunity, you take it if it meets the criteria for the strategy. And if you find 10 of those in a day, as long as they meet the criteria for the strategy, take it. The market does not distribute opportunities for us equally for our convenience. It doesn't work that way. You can have a week where the market's all over the place. You want to know what's going on now? The markets are looking at the US elections in 19 days, something like that. 20 days, 19 days. No, it's actually less. I beg your pardon. It's like 12 days away. And the markets are just treading water. So if you find over the next week or two, the markets are kind of moving a bit, then pulling back, moving a bit, changing directions, it's all about the US elections. The market's just not happening. It's just not going anywhere. It's not uncertainty as much as it is apathy. The market is just like, you know what, I think I'm just going to tread water until we get through this thing. So that's going to happen. Cool. I think that news in the USA affects more stock than the currency itself? The biggest cog in the entire global economic system is the US economy and the US dollar. The US dollar is the most widely used currency in the world. The US economy is the biggest in the world, very closely followed by China. Take China out of the mix, USA is bigger than the next 8 economies combined. So we need to know what is going on with the US economy. We need to know. Don't think that because you live in the UK, you have to trade UK stocks. That's a trap. I'm saying if it's moving, trade it, but don't feel, what I'm saying is go where the money is, go where the opportunities are, is better. So central bank press conferences, especially the Fed and European, having big impacts on the market and trends. Should I still not pay attention as a trader? So I look at the economic calendar because I want to know if I have a perfect trend, what could come out on the scheduled news that could break that trend, that could disrupt it, that could disturb it. And so for that reason, I do. Absolutely, FOMC, if they're going to do a massive rate change, something that could be high impact news, that could be really significant, and an interest rate change or something that could disrupt a trend, I want to be aware of it. What I mean is that it becomes, you suffer from analysis paralysis if you've got too many horizontal levels on the 5-minute time frame, and if you're looking at the news, every single bit of news, and then maybe you're trying to kind of figure that out, that can be really tough. And actually on this note, it's quite interesting because we are doing this with Forex Live. And actually, and this is completely objective, one of my favorite things about Forex Live is that when something happens in the market, and this is my only go-to place, when something happens in the market and I don't know what happened, the only place I go to that I know of that I can go to, because I don't have a Bloomberg terminal, is Forex Live. Forex Live will give you like well, that blip in the market came from this, which is one of the reasons I'm a massive fan. I'm sorry, I just realized this is my very first webinar for Forex Live, but even if it wasn't, I would tell you that. So I'll look at an economic calendar to know what's coming out that could mess with my stuff. So like non-farm payroll, anything that could really disrupt. If I'm taking a trade on euro dollar on non-farm payroll Friday, yes, I need to know that something's up ahead that could disrupt the market. And then if something big happens in the market that I don't understand what happened, the go-to website is Forex Live. Okay, just so you know, there's nowhere else that you can go where they'll research and figure out what caused the blip. So those are important things. Okay, what I don't want you to do is to let that stuff create a bias in your mind to think about where you need to position yourself. Don't do that. Just remember what I said. The big businesses don't want volatility. They want to plan. When you're handling billions, you don't want to stress. It's already stressful enough. You want a steady plan that you can stick to for as long as possible. So the more money is not going to chop and change on a daily basis. They're going to keep it steady. And businesses and everybody you know, think of everyone you know. No one you know is changing their business plan based on tweets and this and that. Nobody actually does that in the real world. Money on the exchange in the currency market, for example, moves hands because of tourists exchanging money, people sending money back to their loved ones, business ordering stuff online, ordering stuff through Amazon, businesses paying suppliers, banks transferring money. There's an actual underlying market, and they're going to do that regardless. They're going to keep doing that. This time next year, they'll be doing it. So we often get distracted. Before, you know, in the 80s, we didn't have access to news 24/7, and so it wasn't actually a factor, whereas today we think that's the primary driver. It just isn't. It's a misperception. So with a day trader, what are the usually timeframes used? You know, you've got the London session, the Tokyo session, the New York session, where they overlap. It's really dense with activity. So usually the early parts of the session will be more activity. But if a market is trending, ladies and gentlemen, it's going to trend throughout the day. So it works. To be aware of that. Take the red pill. Okay, diagonals, trend lines. What I want you to ask yourself is, if I've got a tool and I believe it, you've got to ask yourself, do I think that Bollinger Bands, I'm saying use something, but you should be getting 80 to 90% reliability from it. If you find that it's 50-50, like a MACD crossover, for example, and you find you're not sure if it really works, then it's not reliable. Stuff that's working should be giving you an 80% or more reliability, like the results should be relatively consistent. And also less is more. So if you find you've got a lot of stuff on, try without, just try with fewer things. Try to work out what's the least number of things I can use that will still give me the best results. So I used to have many trades where they have been in profit, and I've allowed them to turn and reach my stop loss for a loss. I can relate to that. So I'm going to tell you about that in a moment. I'm now trading much less, in fact, not at all present due to the choppy markets. Fortunately, I've not burnt my account, but I've lost approximately 30% over the past 5 months. 10% of that was so greed trading, Tesla, absolutely. Everything that you said in there, I bet you everybody else who's listening can relate to that. I can absolutely relate to that. Okay. And my broker doesn't have stocks, aren't you in luck? Because I'm going to talk about that in a moment. So diagonals and trend lines, at Trade with Precision, we don't really, because we find that with horizontals and Fibonacci, we love. So Fibonacci levels, pivot levels, price levels, round numbers, horizontal levels, we love those. Trend lines we find is just another thing that if we take them away, we're still okay. And I'm not saying I haven't seen a channel, so I'm confessing. I'm saying I can see price react within a channel. What I'm saying is that I find that I'm actually still profitable without them. So my answer to you is, if you like them and you find that they add value, keep them. If you find that you try without them for a while and they don't, then don't worry about it. But so it's not a diss at all. So my trading is now becoming more profitable. So thanks for your assistance and analysis, Paul. What a pleasure. Thank you very much. And thanks for following me on LinkedIn, by the way. I really appreciate that. What do I think about the VSA? Do you mean volume spread analysis? So VSA, volume spread analysis is an additional tool. My answer is the same. Volume spread analysis on stocks can work well because you get access to the actual volume. And if you find it improves your accuracy, keep it. But if you find that that is starting to override what you're seeing in the charts all the time, and you find that it's not profitable, then think about it. Forex Factory, cool for the calendar. I like them for the calendar, but definitely for the Forex Live does the best. And the guys are responsive, and they've got so many people. They work on it they work on it really hard. Sorry, they're very hard working on it. DeMark system. Okay, what time should very important for everybody who's listening now. Okay, so I spoke about this earlier, and I realize I'm layering everything that's on the slides with the actual stuff, so I'm showing you this. The daily, ladies and gents, the daily is your most important chart. Whether you trade the 5 minutes or the 1 minute gap or the 30 minutes or the 1 hour, or you trade the daily, all traders need to know what is the state of the daily chart. What is the state of it? If it's range bound, consider not trading it at all. Because at that point, no one's in control, and inside is just a mess. It's just like Euro Swiss is a great example of that right now. It's just a mess. But if a stock is doing that as well, we walk away from it. It's not ideal. So the daily is the magic number, really, because that's where most of the decisions are made by the big money at any rate. Okay. If the daily is trending really well, if it's retracing, you might have a small, higher risk, and you know this already as I'm saying it, higher risk intraday, lower time frame opportunity. But it's higher risk. If it's already on its way up, intraday traders will be milking this. as well as potentially swing traders might have got in on here. So this is really your best possible scenario for all trades. At that point, you've got the lower time frames going up, the daily, and ideally the weekly and the monthly, ideally in a best case scenario. Should your trades be uncorrelated? How do you achieve that? Okay, so we've got such good questions. Let me go further with the slides, make sure I finish that, then I'll get to the questions and I'll go to the platform. I'm paranoid that I'm not gonna finish on time. Okay, so we recommend that you keep a spreadsheet or journal of completed trades. Now, here's the thing. I'm going to tell you a little bit of a secret here that I haven't seen anywhere else. And if you have, fine, but I haven't seen it there. Because trading is a visual activity, because we're looking at a chart, we're seeing stuff visually. A spreadsheet or a trading journal, oh, thanks, Orion, you're a hero. Because a spreadsheet, a lot of the spreadsheets I see that you can download that are free ones or example ones of a kind of a trading journal, they're just numbers on a spreadsheet. To me, that's useless, and to you, that should be useless. The only person that might mean something to is maybe an accountant or somebody who wants to keep track of the bottom line of the performance, but they're not going to get meaning from it, and you won't get value from it. The best trader journal, it's got to be low maintenance. So if you want to go on a diet, but it takes you 4 hours to cook a meal that you eat in 10 minutes, that's unsustainable. It's not practical. And it's the same with a spreadsheet journal. It should take you 2 to 3 minutes to fill out. You need crucial information. So you need, I recommend Excel, because you can do PowerPoint, but Excel is really good. You need the date. So you need to know, let me explain the goal here. It's a pattern recognition game. You need a snapshot of the trade you took when you take it or before you take it, when you've set up your order. You need a snapshot of the outcome, whether it's a losing trade or a winning trade, and both are valuable. I'll talk about that in a moment. And then, and this is the magic part, you need a snapshot about 10, 20 candles later. So it doesn't matter what your time frame is. If it's the daily, you need a snapshot 10 days later. If it's an hourly, you need the snapshot 10 hours later. You need crucial information so that you can find the trade again if you had to do it. Your date and time, what was the instrument, what was the time frame you took the trade on, entry price, stop loss, where you got in, where you got out, was it break even, what was the outcome of those trades? Those are like 7 or 8 different items. Okay, what was your risk on the trade, what was your return on it? What you need to take away from that, where the value lies, is yes, sure, the bottom line outcome of profit or not, but the bottom line should be, what did that trade look like? What was that pattern that I saw? Because what you're doing is you're teaching your brain is a pattern recognition monster. It's a survival technique. Our brain is, you don't even feel it happening. It's not like muscles you can feel they're being used. Our pattern recognition brain is a passenger in the backseat of our unconscious. Our conscious brain is driving the car, making all the immediate decisions, stressing, doing all the stuff. Our unconscious is this passenger sitting in the back that's just looking around and making all these connections and observations. That's your instinct. But when you're a beginner trader, your instinct is junk. It's terrible. It's worthless because it's untrained. So when you collect the journal, what you're actually doing is teaching your brain good pattern, bad pattern, good pattern, bad pattern. So one day you're looking at a trade setup and you go, I've got a really good feeling about this. I know this is going to make profit, or I've got a bad feeling about it. You won't even be able to work out why, but it'll be in your journal collection. It's actually incredibly it's amazing to do that. So let me see if I can find one, if I have potentially have a copy of it to show you, but it's a bit of, I'll show you a bit later. But so it should be a snapshot, entry price, those key levels, the key metrics that you need, but you've got to be able to fill those out in because I like Excel, because you can have it auto calculate things for you. So you put your entry in and your stop loss, and then it produces where your first take profit is, and so on and so forth. And while we're on it, I'll talk about taking profits in a moment, because in answer to that description, that's an amazing comment that I need to come back to. The one comment everybody needs to know the answers to about the not taking profits and stuff. So that's what you need in your trading journal. So you need a snapshot. What did the pattern look like at the moment? What did I see? So you can send it to another trader and he can go, yeah, I know why you took that trade. And then you have a snapshot afterwards to say, what did price action do after that? And then you have a snapshot about 10 to 20 periods later. Now, let me explain why. You might not know this, but what you really want to know is, was I right about the direction of the market? That's what you really want to know. Was I right about the direction of the market? I mean, I can live with a loss, but was I right about the direction of the market? Because how can I trust myself to take trades if I don't even know if I'm reading the markets correctly? So when you take a snapshot later, what you'll notice is that sometimes, in fact, more often than not, you'll find out if the market did go the way you thought it was going to go. And that's what you need. If the market didn't go the way you thought it was going to go, you also need to know that. Your brain will pick it up. You don't think you're going to get anything out of it, but your brain will go, okay, and then it'll know. And within, I guarantee it, or let's put it this way, I'm confident that within a month of doing that, your ability to trade, your confidence, your ability to read price action will leapfrog a year in advance. Like, it'll save you a year's worth of trying to build up your skills without that journal. So if you don't appreciate it, it's really, really powerful. So that's why it's powerful. Okay, that's what's so good about it. You cannot assess your trade execution without a spreadsheet journal. You must be able to freeze time so that you can review exactly what you were seeing when you placed the trade. So you must be able to look at a trade 3 months ago and go there and look at the trade, and you go, okay, that was there. I saw that trade set up. Why did I take that trade? Like, the higher time frame wasn't even going in the same direction. So actually, ideally, you want the time frame, the trade you're going to take, a snapshot of the higher time frame. So if you're taking it on the 4 hour, you want to see the daily, and then what was the outcome, and then what was the outcome a bit later. You get that, your brain is going to go, and I'll show you that. I'll show you so that you can visualize what I'm talking about. You need to conduct your own reviews on a regular basis, monthly as a minimum. So what that means is that this is a very lonely activity, at least in terms of on your initial journey. People around you who aren't on the same journey, who aren't learning with you, are not really going to be able to relate. And in fact, funny enough, some of our biggest critics when we're, most of the time, this is a generalization, most of our biggest critics when we're undertaking our hopes and dreams are the people closest to us. And it's a weird human thing, but we do it. I'm lucky, my family are massively positive and all entrepreneurs, so they don't really do it, but my girlfriends have always wavered on this whole thing. Every great sports person or business owner receives regular feedback, and coaching, trading is no different. Find a trading mentor, people. A trading mentor is someone who can just give you objective feedback on whether the mistake you made was yours or whether it was a market move, because you want to get to the place where your analysis was fine. It was just a statistical, every other trader would have taken the same trade, but it was a statistical loss. And obviously, remember, without screenshots, objective or constructive feedback is impossible. Feedback is your life support system. Without it, you will eventually fail. Stephen Covey being a good trader. I'm checking the questions. Absolutely. Is that Hewer? It's a good name. Let me know if I'm pronouncing it correctly. So why do most trading strategies fail, and how to prevent yours from failing too? Risk and money management. Oh, I'm going to show you some cool stuff here. So professional traders manage risk first and foremost. They've got a strategy of which risk forms a simple yet crucial part. The professional focuses on one thing, executing that strategy. So let me give you an explanation as to why risk management matters at all. So in poker, professional poker, which you can also, similarly, it's a learning skill, a learnable skill, you can make money doing it. You could have a good hand in poker, but somebody could have a better hand, or they could play you better, or you could read them better. So it's not just a technical thing, but there's also a little bit of a textual feel to reading the moment. So in professional poker, they worked out through mathematics, and this is probably MIT or someone who worked out that you could be up against a really good player, and so you could have a series of losing hands, even if you have been the best player up until that point. So you could encounter a losing streak that you had not actually planned for. And so they worked out that if you risk too much on every hand you take, you could wipe out your kitty by the time you get to a winning hand. So they call it risk of ruin. And risk of ruin basically says that if you drop your risk down to a small enough amount, even if you hit an unknown losing streak, you could never wipe yourself out by the time the winning hand comes around. Now, the strategies I use have a 60 casually, or at a minimum have about a 60% success rate without much skill involved. When I'm on a roll, they have an 80 or 90% success rate when I'm in the zone or more. So it's unusual for me to have more than 5 losing trades in a row. That's really weird. Out of 10 losing trades, I might have 5 losing trades. It's possible, but I would expect my average number of losing trades per 10 trades to be somewhere between 2 and 4 losing trades. And the rest, of course, I make more money on, so they compensate for the losses. So, but in poker, imagine you had 7 losing hands in a row. So they worked out that if you dropped your risk down a certain amount, that if you hit a losing streak, you would survive the losing streak. It wouldn't do so much damage to your money, to your existing kitty, that you couldn't recover from it. That's what I want you to remember. So just be aware that smarter people with better math skills and better data have worked out that if you keep your risk down to 1 or 2 or maximum 3% per trade, and actually 1% is better. 1% is just the best one, that you can never really damage your account beyond that. And obviously, if you have an extreme losing streak, something's wrong, something else is wrong. So that's the point, that if you go beyond a certain amount and you have more of those, your account damage maybe is so big that you lose the will to recover it. Maybe it's only 40% down, but you just lost the drive and the confidence to do it. So it's not just our actual money loss, it's our emotional loss. How many hits in the kicks between the legs, how many kicks on the nuts can we take before we eventually go, I just can't do this anymore? And part of that comes from the risk stuff. So risk money management is really keep it small, be able to take the hits, and that isn't the thing that sends you over the edge. And you shouldn't think about the money. When Tiger Woods is playing golf, he's not thinking about the money. He's thinking about his swing. He's thinking about the things in the game, in the moment. The money is a byproduct of not thinking about the money, if that makes sense. So losing money is the least of my troubles. A loss never troubles me after I take it. Forget about it overnight, but being wrong, not taking the loss, that's what does the damage to the pocketbook and the soul. These are all hurdles that everybody has to go through. So if you're listening to me now and going, well, this is a problem for me and I need to get through it, you need to understand that everybody had that same problem. But the sooner you can get past that, the sooner you can get onto the path. So that choice is yours. Jesse Livermore wrote a book called Memoirs of a Stock Operator 100 years ago. He made money on the 1929 stock crash. You read that book, I guarantee you'll listen and you read it and go, nobody's changed. People do not change. In that book, which is almost 100 years old, 1929, he probably wrote it after that, but the behavior of people is exactly the same today as it was then. And if that doesn't convince you that technical analysis trumps fundamental because people just behave the same way, if you can't relate to it, then nothing will. So emotional control and the trader mindset. I'm not dissing fundamental. It has its place. Value investment, Warren Buffett style, unbeatable. The Little Blue Book that beats the market, fantastic book. Value Investing by Benjamin Graham. Benjamin Hill? Benjamin Graham. Not Benjamin Hill. Benny Hill is a different thing. Unbelievable. But day to day, trade for a few hours, I only need technicals. Emotional control and the trader mindset. So successful traders have the ability to focus on flawless execution of their strategy rather than profit or loss. So this is saying, it's like the Japanese tea ceremony. Get into the zone, focus on the process, make sure your desk is nice and clean, make sure you're up to date with your strategy, make sure you've got a plan and you're ready to go so that your brain gets into a non-emotional state. And when you're at objective, you're going to be at your best. It's very possible to place a flawless trade that loses money. This is true. The state you want to get to in the long run, your goal as a trader, whether you know it or not, is to get to a place where the trades where you lose money were not your fault. They were good trade setups. They just lost money because they won't happen very often, rather than you going, I actually had money. That was a good trade and I cocked it up. Like, that's the thing. So it's also very possible to place a poor trade that makes money. Of course it is. And the problem with that is that creates bad habits because then you switch to gambling. Gambling is basically making bad decisions and making money. Over a large sample set, good trading always wins. So the only way you can know if your strategy wins is if you execute 20 as close to flawless execution of 20 of the same strategy, and then you've got 20 trades. You can go, okay, I should make more money than I'm losing. And anyone who knows me who's in tonight, I recognize some of the names. You know what I'm talking about. You know that initially you think you've taken a good trade, but then the daily was going in a different direction, or you missed the news announcement that maybe could have disrupted the trade or something. Maybe you were trading non-farm payroll and you didn't realize it. So the defining characteristic that separates the consistent winners from everyone else is this. The winners have attained a mindset, a unique set of attitudes that allows them to remain disciplined, focused, and above all, confident in spite of adverse conditions. So I'm speaking to the newer traders now. When you read that, that is not saying you cannot achieve this. That's not what it's saying. It's not saying you either will or you won't. You're predestined to do that. It's not saying that. It's saying that's what you need to work towards. You can do it, but you've got to work towards that. Remember, if you say to me, I need to lose weight, can you give me a diet? And I give you an amazing diet that's like healthy fats, lots of salads and veggies, and maybe a couple of lean proteins and some exercise, which is universally accepted. And then I meet you in 6 months' time and you've put on weight. It's not giving away the strategy is not the secret. It's the fact that did you apply it properly? Did you stick to it? That's the secret. I can throw a strategy at you now, but will you be able to get all the other stuff out the way, the non-trading stuff, the life stuff that's in your way? Okay, so my point is here, this is a learnable skill, ladies and gents. If your confidence is low tonight, I'm not trying to sell you on anything. If anything, I'm just trying to sell you on you can do this. Okay. So the point of what we're doing with Trade 360 and Trade with Precision and Traders Expert and all of this tonight is to try to create content that can help you get through those hurdles. Like this, believe it or not, there's not a lot of great stuff out there. We're trying to do that. Trading strategy, not technical analysis. So most new traders would take a trade just because 2 moving averages cross over, or there's a shooting star candlestick, not a shooting start. This is not enough. These are just technical analysis components. Technical analysis are the components, and a trading strategy is the plan. So it's an evidence-based activity. Let me repeat that. It is an evidence-based activity. Okay, we've run over. We're going to be another 20 minutes, so bear with me. I can tell already because I want to go to the platform and I've got stuff to tell you, so bear with me. So it's an evidence-based activity. I'm building up a case to take a trade. There must be more evidence to support taking the trade than not. So the plan is essential for knowing what, when, and where to trade, as well as what risk, money, and management parameters to use. And there's obviously far more to it. It's not just high-quality components that matters. It's how you put them together that counts. So traders don't give it enough time to work. This is absolutely true. You know, that happens. You'd never dream of having one golfing lesson and expect to perform like the world's best professionals. So why do traders expect this? Well, golfers know that it takes many years of regular practice and mentoring before they can even dream of mixing it with the best in the world. Trading is no different. So it's like a sport. It's actually better to think of it as a sport, because in sport, you know that losing is going to be part of your future. You know that, but you also know that the more you train, the more rest you get, the more you do certain things, the more you practice, the better your coaching is. You know you're going to win in the long run. Golfers know that it takes many years of regular practice and mentoring before they can even dream of mixing it. And golfing, man, you think, if you've ever tried golfing, you know about your headspace. Your head game is a massive factor in that, more than almost anything else. So work hard and stick with us for a few years, and we can help you on your trading journey. Absolutely. I'm certainly going to contribute as best I can. Jack Nicklaus is widely, I beg your pardon, regarded as the most accomplished professional golfer of all time, winning a total of 18 career major championships. He played his first round of golf at the age of 10, and he shot 51 over 9 holes. So don't be too proud to take lessons. I'm not, and that's a big thing. Pride and ego, those are signs that we are not emotionally objective yet. That's a journey you have to go on, man. Okay, so we're going to go across to the trading platform and we'll come back to this. So we're not done yet, so don't go anywhere just because I'm on this. Okay, so first of all, let's go to the platform. I also want to spend some time on the charts, and I also want to answer your questions. Okay, so I just got to check that this is all updating. So what I've done here is I've logged on to the Trade 360 platform, which if you know MT4, you know MT5, you're going to recognize the look and feel of this. But there's a reason why. I'm going to show you in a moment, there's a reason why this is so cool. So you can have your different tabs at the bottom, and you can do that. I've added on a couple of moving averages, or at least in terms of the DAX, I've thrown on a couple here. They're actually a 50, 20, and 10. I've kept it relatively simple. So this is what I want to talk to you about. So first of all, if we look at this chart here, I want you to note that the market's largely going sideways. Forget about what it is, forget about the time frame. We'll go on the daily for the purposes of this, but it's going sideways. So does that mean that there won't be money-making opportunities here in the future? No, I'm not saying that. I'm saying that today, there's nothing that I really want to do. And someone's going, yeah, but I can see that there's support and resistance, and I can see that it's a nice bullish candle, and it's range bound, so there's probably a nice potential range thing up to that. Yeah, okay. But the question then is, if I can only take 2 or 3 trades today, is that the best trade setup I've seen? That's the next question I want you to ask yourself. Is that actually the best one that I can find? So yes, it's relatively bullish, and yeah, it's probably going to be fine, but blah, blah, blah. So let's go on and have a look at the others. And this is to me is absolutely amazing. So on one of the comments would said, I don't really have access to stocks. Okay, if I could weight my portfolio, I would say that currencies, although I love them, they are by nature ranging. You've got 2 economies battling with each other. You've got 2 parties. You've got GBP, Aussie dollar, dollar yen. You've got 2 parties pushing and pulling like a tug of war. Ranging is normal for currencies, or at least much more common for currencies. It happens to trend, but ranging is very common. So you need to be aware of that. When you look at commodities, you look at stocks, forget what you've ever heard. Stocks trend way more than they consolidate. Way more. Okay, historically, you can go and look at an index, and we'll look at, let's go and pick up. QQQ is a beautiful, beautiful creature. This thing, let's see if we can get that history downloaded. I need to check if I am actually logged in as well. I need to just make sure that sometimes you get logged out and so on and so forth. So I'll just check on that one. I think I need to log out and log back in. So let me go across and just do that quickly. So I'll go through to my user account, go through to my trading platform. That all looks good. I've got my assets on the left-hand side. That's what I'm looking for. Thank you. This is pretty cool. I can get a nice little menu here that's going to log me in when it does. And there's another thing that I want to show you as well. So while I wait for this to happen, okay, tell you what I'm going to do, just reload this quickly. This is on my side. I've got a lot of stuff going. I've got camera footage going. I've got a whole ton of stuff going here. So here I can obviously access all of my assets, S&P, Google, NASDAQ, and this is what makes this relatively unique. It's very unusual for those who don't know NT4 to be able to trade stocks on it. I can actually, on this platform, I can trade not just futures, and not just CFDs, but I can actually trade the individual underlying stocks, which is insane because it means that I can buy and sell on those ones. So I'm going to then go through to my user accounts, go through to my trading platform, and I'm going to just start the MetaTrader 5, and I need to just log into that. So you're witnessing, because I was chatting all the time, it logged me out. Okay. So the other thing that I want to show you while that's going on, so there we go, that's Costco. I'll come to that in a moment. Let's go through to, it's one of my beauties. Let's have a look at this on the weekly. So it's really nice and bullish over the moment. There's encountering some potential resistance up there. This is something that I wanted to show you. And then I'm going to answer your questions, and then I'm going to look at the platform as well. So what did I want to see, which was the compound stuff? Just going to quickly grab this one. So in order to get you to improve your confidence and show you something, I want to show you something pretty cool. So I've got a trade calculator here. Okay, so the idea here is to say to you that if I take 10 trades, that's fine, don't worry about that. I take 10 trades and I'm risking 1% per trade, and my strategy is on average a 3-to-1 reward to risk strategy. I want to show you something pretty cool here. So imagine I'm a beginner, I don't really know what I'm doing, and I get one full winning trade. So this is actually, this particular, what I'm demonstrating here, it goes up to you. Okay, here it goes up to you. So in this particular case, traders always tell you about winners versus losers, and actually in reality it's very different. We can have partial wins, we can have break evens, we can have partial losses. That's the truth. So let's just say in this case I have one trade I managed to get it right out of 10. All right, so I'm down 6%. Okay, as an example. So I have 9 losses, I'm down 6%. Here's where it gets really interesting, and that's a 3-to-1. So let's just say as a professional, so-called professional trader, I get 2 trades that hit 3-to-1. 2 trades that hit 3-to-1. Then I get, say, 3 trades that hit, I don't know, 2-to-1 or 1-to-1. And then maybe I get another 3 trades that hit break even. So out of this, out of my 10 trades, I have 3 trades that don't lose money, but don't make money. I have 3 trades that hit 0.5% profit each. So they basically just bank a little bit more than nothing. And then I get 2 trades that hit my 3-to-1 targets. I'm not even including 4-to-1s or 5-to-1s or 6-to-1s. And at this point, I'm 5.5% up. So the 10 trades could be over a month, it could be over a week. Obviously, the idea is it's based on a reliable, high probability strategy that you have yet to discover. My point is here is that you might go, well, if you have somebody who comes in who's applying for a job as a trader and they only have 2 full winning trades out of this batch, they'll be employed any day of the week. If they can give those kinds of returns on a regular, consistent basis, that's incredibly successful. But I want you to take note that it only required 2 trades to hit 3-to-1. The rest, the magic, comes from not losing money, from getting to break even as quickly as possible, which means maybe taking 50% of your profits off the table when you hit your 1-to-1 target. If you don't know what I'm referring to here, tell me and I'll explain it. If you hit 1-to-1 target, if you've got a 2-to-1 or 3-to-1 target, hit 1-to-1 target, you take half the profit off the table, your trade is now risk-free. Okay, and partial wins meaning I get 0.5% each out of those, and then maybe I have 2 trades that hit 3-to-1, and I'm up 5.5%. So all I want you to take away from that, ladies and gentlemen, is that I want you to take away from that trade management on an average strategy or just semi-decent, but being smart about it, taking money off the table will change the results. That's what I want you to take away from it. So take money off the table. That's your job. The stop loss exists, is born into this universe. It exists solely for the purpose of protecting your capital. It's like a bulletproof vest or a parachute. That's its job. It's a bodyguard. It's to try to keep losses to a minimum. But take profits is born into this universe and exists solely to go out there and get you profits. You can't grow your account without taking profits. So you need to know when you're getting into a trade, am I taking profits? Where's my stop loss? Stop loss is there to reduce the damage to my account. Take profit is there to grow my account. You can't, if you are not taking profits, which is why I know some of you listening can relate to what I'm talking about. You finally have a profitable trade and it still ends up a loser because you didn't take profit at the table. So I'm saying to you, the line in the sand is that 1% mark. If you get 1 to 1, take some profit off the table. You'll sleep better at night. Okay, so I'm going to go through the questions and I'm going to show you some amazing charts that I really like the look of. I'm going to go through stocks. I want you to see the benefit of this. But also, you know, there's something else I want you, while I'm reading your questions, I want you to be aware of this, okay? The goal here really, I need you to, you know, if you want to do this, you need to be able to set up your account. So I'm going to give you a link. So I'm going to give you a link that I'm going to send through to you now. If you're interested in this, it's a link to at least direct you to where you can register one of these accounts if you want to do that. You need to do it, and then obviously you want to be able to create your watch list, which I'm going to show you in a couple of minutes. So we might run over, like I said, by 10-15 minutes. And obviously with these types of things, you're going to need to put in a minimum deposit into the account because it's like you can't run and trade an empty account, so you need to put a minimum deposit on that. But one of the things that's very cool about this platform that I really like about it is, first of all, it's MT5. You can trade stocks. If you want to know what is the difference between MT5 and MT4, the predominant biggest difference is MT5 can trade stocks. That's basically it. For now, that's the biggest difference, trade stocks. And so you can do that. The beautiful thing with that is there's 0% commission that I'm aware of. Okay, so there's no commission on trading those stocks on MT5. And you can switch obviously between MT5 and the web platform, which is what I'm showing you now, anytime you want. And there's 500. I'm going to show you all the different assets you can trade. I'm going to show you the kind of stuff I like versus the stuff I wouldn't touch with a 10-foot barge pole. And in fact, if you want, I will look at a particular market for you. If it's here, we can go have a look at it. I want to look at things like Tesla. I want to look at a few other different markets. I want to show you a couple that nobody talks about that are good money makers. Okay. So that's where you can kind of do that one. Okay, so let me quickly send you the link for that. Okay, so there's a nice long link for it, which I'm going to send through to everyone else. I'm just going to send that through to you, and I'm going to send that to everybody. I'm also going to send you a shorter link, which looks a little bit more like this one as well. So you have that one, just so you have it. I'm sending it to everybody, so you all have that link. Okay, now. I'm going to go on this and then we'll give me another 10 minutes. Let's spend some time on the platform and let me answer all your questions. So the next few questions are, there was a correlation question as well. There was risk ratio. There was a couple of other ones there. So you can trade. This is the logic is, you're saying to me, what time frame should I trade? 5 minutes, 15. I can trade any time frame, but the trend has got to be good. Ideally, it's in the same direction as the daily. So let's go and have a look at, let's look at the NASDAQ today. Now, what does the NASDAQ look like today? Okay, but it's not happy. It's relatively speaking, it's not happy. We'll go to the daily. At the moment, it's potentially going to turn around. It's actually in an uptrend, ladies and gentlemen, and it's back down here at support. It is back down here. So it could find support where it is now and carry on heading up, potentially. But I'm also aware that we've had a second reaction at close to those highs, and therefore it's maybe not strictly speaking safe. Some of the best charts that I've seen this week might have been some of the Aussie pairs. They were looking incredibly good. They had some really good trends. Let's have a look at those. So timeframes, minutes, I want to know what's the daily doing. Ideally, I want the daily trending, and I want to trade those lower timeframes if I can. Okay, so let's just have a look. For example, here, this has got a 4-hour that's been trending upwards. We'll have a look at that. Have you tried linking your account to the My Forex book to make journalism easier? Absolutely. Absolutely, that's one option. I like the Excel spreadsheet as well. I like that for me as well. But it is also, if you can do both, then do that. But if you're trading, if you can't link your account, maybe you're trading one that doesn't allow you to link it, then that's going to be an issue you're going to have to kind of go with. Okay, so Aussie CAD on the daily is in a downtrend. It's pulled back into the moving averages here. This is not a bad place for it to potentially change direction and start heading down. So what is the daily trend here? The daily trend is down, but it's in an area where it can change direction and continue down. Makes it slightly higher risk to trade because it's in that potential process of trending. So let's go and have a look at Apple. Let's throw a few more things out there. Okay, we've had a bit of a gap down because we know that the performance results have been there, so we'll leave that for now. Let me show you something really cool about Apple. So it's had an overdue for a correction. So there's a reason for that. When we go to the NASDAQ, it'll make a little bit more sense, but that does imply that we're going to see that actually happen with that. So just having a look here at this, okay. And so that's, if you look at it on a monthly basis, right, you can see that distance from the moving averages here. I think we're due for a bit of a pullback, a healthy one. And I think we need to do that in order, and from a technical perspective, the fundamental folks will be like, I need a reason for that. Why would it do that? But as a technical, you're going, well, the reason will become apparent, whether it's coronavirus or whether it's underperformance, it'll always show up, but it's overpriced. It's basically overpriced. And there's just not enough buyers beyond that point. So I do think we're going to see a correction in the next 90 days, maybe in the next 3 or 4 candles potentially. It can either tread water till the moving averages come up to it, or it can do a nice healthy correction. 10,000 is a really sensible place, by the way, for the market to come back down to. Is 10,000 would be a really, really nice place for it to come back to. Healthy, still in a bull market. We're still in a bull market. Come back down for a couple of months, maybe December, January, it continues on upwards, and the bull market continues. Okay, it's the same with gold and a few of those other areas as well. I prefer, the US markets are very nice from that perspective. So let's have a look at those. Okay, we're still in an uptrend, producing a nice bullish candle today. So the question is as well, are we due for, am I ignoring the fact that we may be due for a market correction? No, I'm not. We will have in our future, we will have bear markets and bull markets. We will. I'm not disputing that. It's not about being right or wrong. It's about the charts right now look more bullish than bearish. So if I'm concerned about a market correction, I can reduce my risk. I put a stop loss in, that's what it's for, that's okay. But the markets look more bullish than bearish. And how many of you are thinking the market's gonna crash and it keeps going up and you're not buying, and it just keeps going up and you're not buying because you keep thinking it's gonna go down again? Believe it or not, you'd lose less money just trading it when it says it wants to go up and then getting stopped out when it goes down, rather than selling it when it keeps going up. My favorite trading method is, I love pullbacks to the moving averages. My personal absolute favorite, cyclical, orderly behavior, pull back to the moving averages, trade in line with that. Normal 50, 20, and 10 simple moving averages. I love it. That's my favorite strategy. What about reward to risk ratio? Stop loss for me, the turning point, ladies and gentlemen, I'm giving you some big tips that aren't on the cards today. I look to put my stop loss below that swing low. So if I'm a nice bullish candle, looking for that. So today, potentially, if I want to trade that, stop loss above the high, stop loss below the low, entrance above the high, have tomorrow's candle take me into the trade. If it's going to take me onto that one. Okay, and take profit at 1-to-1, 2-to-1, 3-to-1. Trail my stop once I hit 1-to-1, not before. So how many currencies do you scan daily? There's 27 currency pairs. If you start with euro, dollar, GBP, dollar, Aussie, dollar, and then you go with the euro crosses, euro, GBP, euro, Aussie, euro, Kiwi, and you even include Kiwi, Swissy, Kiwi, yen, you end up with about 27 different pairs. Currency heat maps are very cool. They should confirm what you see. So if it says GBP, US dollars bullish, or GBP is bullish, you should see uptrending. If it doesn't match that, you need to ignore the heat map. How do you trade a stock that jumps to a new yearly high on an earnings report? You don't trade the earnings report. Earnings report is the same as economic calendar news. You step away from it. Make sure if you're unsure about it, either get your, either you have a guaranteed stop loss or you exit the position and take your profit. As a trader, we're talking about trading now. Do you draw your own support resistance levels? I do both. I play with indicators, but I like to do my own. And the simple rule is this: monthly, weekly, or daily, find 2 above and 2 below. What do I mean by that? I'm saying don't suffer from analysis paralysis. Find the 2 most significant levels above and below where you are now. Don't make it too complicated. You can add more later. Just keep it simple. And it is lonely, it is. Record keeping, make it simple. Try to make it so it takes you 2 to 3 minutes to do it. It's incredibly powerful. Before we wrap up, I'm going to try and close this off in 9 minutes. Before we wrap up, I'm going to show you the trading journal so you can see what I mean by that. Is the robotic mindset the ideal mindset? You need to protect your emotional confidence. You need to do that for yourself. So don't expose yourself to toxic situations. In the same way that you wouldn't expose yourself to a toxic human being, don't put yourself in situations where you're getting kicked in the nuts when you know you shouldn't do that. Expose yourself to healthy situations and talk about, manage your own expectations. Go, okay, I'm taking a higher risk trade now. The evidence says it's bullish. but I understand, maybe I'm scared, maybe I think we're at the top and the market's going to top out and it's going to hit lower. So what are my choices? Demo trade it, reduce my risk, not trade it at all, or risk full 1%. If my confidence isn't there, what can I do to protect it? How will I feel if this is a losing trade? Risk it. Then I will risk 0.5%. And then if I'm wrong, I have acknowledged the risk is there, but if I'm right, I'll still make money. Yeah, so MT5 allows you to do it, but think about it like this. You can log in here and you can access the stocks on the MT5 platform, and the only reason most people are using MT4 is because they're using expert advisors that might not be coded for MT5, but most providers will allow you to switch that up. Otherwise, MT5 is it's 95% the same. You can use it, so there won't be any difficulty in using it, and you can trade stocks. And I'm trying to encourage you here to consider that stocks are the way that most people have become wealthy over the last 30, 40 years. They really have. Commodities and stocks, and they're existing. Go through this. Look at the symbols here. Look at what I have access to. And by the way, if I click on this, I can see the difference here. I can trade CFD if I want. It gives me all the information I need on that. But I've also got, potentially, if I want, I can look at, I've got electronically traded funds. I've got futures. I've got metals here. There was something I want to show you, physical stocks. I can trade the physical stock as well. I love the futures and CFDs. I like that. Why? Because I can short them. I can trade them to the downside. But, you know, I want you to understand that you can do both, and they both exist within this. Okay, and I can then add them to that. That's insane to have that number of items here. And this is a very, very big thing. Okay, so what is NASDAQ? So NASDAQ is an index. So the US has technology. So your Facebook, your Apple, Netflix, Google, Amazon, they all are registered or listed on the stock exchange, and they're also grouped together as a basket on the NASDAQ, which is the nickname they call it. Okay, the NASDAQ is the same as the Tech 100 stocks. Then you've got the S&P, which is 500 companies of a certain particular market size, and that would include like Starbucks and McDonald's, and from different sectors. So S&P gives you 500, gives you samples from companies that are US companies that are based all around the world. It's a great thermometer for the global economy. And then you have the Dow, which is the top 30, which was created in 1896, which was back then was shipping and transport and rail. And so they've got these clusters of all these indices, but you can also trade the individual stocks underneath them. The Russell 2000 is 2,000 companies that are smaller companies underneath that. If you don't get these, you could never know this stuff. Every single person who existed in the universe started knowing nothing about this. So if you feel, oh, I don't know anything about that, no, you can learn about it. It's fine. Don't stress about that. Where's the link? So you should have the link. I should have given that to you. I'm going to make sure I give it to you again. I'm going to drop it in here as well. So that should be the same one. You get it again. Should be that one. So the strategy that we're covering now, basically, Max, what I'm going to do is Oren is I'm going to ask him to see if we can create a separate webinar where we can talk about strategy. In a different webinar, we can do that. Okay, and I'll use the long code as well. So I'm also going to use the long one. Okay, that's fine. I'll do that as well. And I've got that here. Let me just give me a second here. This is the link. And I'm just going to send that through to you as well. And my dog is trying to get in because my dog doesn't care that I'm on a webinar. Doesn't care at all. There's the long webinar link as well. How to identify long trend reversals. Okay, so, all right. So this is a very cool question for everybody who's listening. Let's talk about gold. So let me show you where there's a real, I'm going to let the dog in, excuse me. Come in. Otherwise, she doesn't take no for an answer. So sorry about that. So let's talk about gold. So let's look at the monthly on gold. Okay, so notice how the gold is very overextended from its from the moving averages. Think of the moving averages as true value. It's overextended. It has to come back down, and that puts it down at about 1800 to 1600, somewhere in that range. If you do Fibonacci, that's about a 382 to a 618, somewhere in that range as well. It needs to come down. I still think the longer term for gold is up, but it does need to breathe out. It's got to take a bit of a breather. So that's the logic. So the question is how to identify long-term trend reversals. One of the ways in which you'd need to see that, this is for another webinar, is you'd see a lower high and or even an equal high double top like this, and your indicators would be bearish divergence. We could talk about that in a separate webinar, which I'll ask Oren to take care of if you guys want it. If you're interested in that, you need to send emails in at the end and say, please, can you give us more content? Okay, please do that. And then we can talk about that. But gold needs to come back down here. So there's some potential for gold to be heading back down to those levels. And then when I go down to the daily, for example, you can see that right now, there's a bit of a key level here. Price broke through that, and he has that 1800 level. So potentially gold needs to come back down to this level before it can then resume its longer term uptrend. And right now it's just going largely sideways. The reason it's going largely sideways, it's just treading water until after, for the next couple of weeks. Maybe in the day or two beforehand, it'll start, like, it's clear, you know, it's clear who's going to be coming in, and then it just starts to move on that. But I think I'm very cautious. I got to say, for all of you who are still listening, I am incredibly cautious about getting involved in the markets. Just if you find the market is chopping and changing its mind, it's because of the 3rd of November, which is the big one. Okay, so yes, when you do that on the longer term, price should be coming down lower. There might be short-term selling opportunities, and you know the distance. You know, as soon as it gets to this level, you should potentially get out of those shorting positions in terms of that. Okay. You may be able to, yeah, you should be able to access the link on your cell phone. If you can see it here, you should be able to do it. And you can email everyone at community@traders.expert. Okay, so I'm going to send that through to you so that everybody has it. That should be it to everybody, and you can email them and just say, look, can we get more content like this? I would love to do a 2-hour webinar special or 1-hour webinar special, but again, that's not up to me. That's actually up to clients. And so that's there. Cool. Okay, great. Thanks, everyone. Okay, so we've got 2 minutes to spare, and what I wanted to do was show you some amazing stuff. So first of all, oil. Let's talk about oil quickly. Oil is going largely sideways. Now, what is the longer term trend for oil? It's actually down. This is a big difference. I want you to understand this. Oil's longer term trend is down versus gold's longer term trend is up. So actually probabilities are that oil will potentially start to head lower. That's something I want you to take, and it's going sideways. So there's no real, the second dog is now at the door, seriously. And so there's no, that's where it's a little bit kind of high risk. Gold wants to actually longer term wants to go up. It's treading water a bit at the moment. Oil longer term wants to go down, and that's kind of treading water at the moment. When we look at a couple of stocks like Apple, I want to look at a few others. Costco, for example, is beautiful. Costco is beautiful. That's really, really, really nice. High probability success on those because it's a stable company. If you want to know why, if you need a fundamental reason, Costco makes money even in bear markets because people got to save money. So they go buy where they wouldn't normally shop at Costco, they now shop at Costco. So they do really, really well. This entire glitch here was the entire impact on Costco that when we had that wobble back in February and March and April, when the whole market kind of bottom fell out, that was all that happened to Costco. Rock solid and stable. So you can trade those. There's nothing saying you can't go and take a trading opportunity on that. Potentially on the 1 hour, you might have some really nice, I mean, to me, this is what I'm looking for intraday trading opportunities, and you can do that. And it doesn't gap a lot. It's not that dangerous. It's not like that. So trading highly liquid, remember, 2 to 5 trades per week. So I'm looking at all these different instruments. And the thing is, for those of you who are looking at currencies who haven't really considered stocks or indices, just look at them. You don't even have to trade them. Just watch them for a couple of weeks to see actually how they provide strong trends. Really, if I had gotten over myself and not traded currencies for a while, because currencies are popular, but there's a reason why. Before currencies, they only came into being at about, they've been around tradable since the currency market since 1970 something, and only available to the public in about 1996. And they were 24 hours a day, 7 days a week. Prior to that, you had the stock market, which is pretty much just the trading session. So for people in the 80s to be able to have access to a market 24 hours a day with the greatest liquidity of all the other markets combined, it was amazing. That's why they rave about the currency market. But the reality is you get pros and cons. It's liquid, but it doesn't necessarily trend as much. Right now, the Aussie pairs are trending really well. Dollar pairs, forget about it, because the dollar doesn't know where it's going, the euro doesn't know where it's going, and GBP doesn't know where it's going. And so they're kind of all over the place. Okay, so just be kind of aware of that. So ladies and gents, what other questions do you have? I was going to show you a trading journal, and we're going to wrap up because I've kept you here long enough. Let me go find that trading journal, and then I can show you some stuff here. So this was just an example of that. And any other questions you have, just shout them out. Shout them out. Okay, here we go. So this is an example. Okay, this is a trader journal. This is the one I set up. So the idea here is that you would have a snapshot of the charts, when you get in, when you get out, target outcome. I had it pump out the numbers straight in there. So if I put them in, it would pump them out. Then I'd have a higher time frame. Why did I like it? So in this example here, you can see afterwards, I was like, why did I take that trade? And there's an outcome of ultimately what happened. So that was a nice profitable trade. But there would have been a reason why I would have wanted to take it. And I can comment on that. I might say too close to support. So maybe in this case, I'm too worried about support level and I make a comment on that. You need a bit more information in the beginning than you do later on, but and that's it. And all of those numbers then get pumped to a front page. And then I can work out, do I make more money off currencies or indices, those kinds of things, and I can pump out those numbers and do that. This is an incomplete one to show you that, but that's really the idea there. You can do that. So let me look at your questions and see what you got. Kenneth, let me see if I can send you, I get that, I'm with you. I'm going to send you you should be able to, because it's a website link, that's all it really is. Here's a shorter link that I'm going to send you as well. So we'll do that, which I'll send to everyone as well. And Clarence, I'll make sure that that gets emailed to you as well. Cool. The indicators on my charts are moving averages. Just for the beauty of what moving averages do is they frame price action. So when I have a really, really nice trend, my other dog is driving me nuts. When I get a really nice trend, I find that I only need the two really, but having the three together is a really good idea. It gives me a frame of reference. It tells me where I can potentially join a trend and when price is very far away from the trend. This is the problem. Yeah. Whatever. This is a girlfriend's dog. It's not my dog. I'm a manly man. I'm a man, but this is the girlfriend's dog. So she's decided she wants to come and join us. So, can you please repeat what you say about indices? What instrument is in trend nowadays? Okay, this is cool. The US indexes, they can trend incredibly well. So this is the S&P, which is doing well. The strongest of the lot would be technology stocks, which is the NASDAQ. So if I'm, this is what I'm looking for. This is money making. So for the newer traders who are wanting some guidance on where safer trading conditions lie, you want a stock or an index or any chart that's looking like this. And you want that cyclical, orderly behavior. When it's well behaved and well structured, it actually behaves more predictably. It's like it doesn't do random crazy stuff, because in fact it's very attractive to experienced traders who maybe were learning in the 80s, who now are in their 50s and 60s managing a lot of money. They just want the really safe stuff. So they'll participate in this, and they're very systematic in the way that they think and behave. So you want something that looks a lot like that. Think of it as a personality that's nice and calm and stable versus something that's completely erratic. And then if you had to go and compare that to, let me show you something, for example, let's go through and then have a look at, say, Euro Swissy, and then I'm going to just add that to my pile. This is where the insanity is. A stock screener, yeah, I mean, I could do that in this particular, because on MT5, you could obviously create a stock, you can get a stock screener, you can do that if you need to, but I can do it by eye, because I'll usually because I can scan the dailies and quickly sort out what I want, which doesn't take me more than, I don't know, 5-10 minutes when I go through all the commodities or whatever, all certain things that I have. Then I can take time and go through US stocks and UK stocks and all kinds of other stuff. And also, while we're on that, by the way, if you're looking at emerging markets like other countries will offer that. Most of them are quite liquid. If it's not liquid, it'll be gappy and spotty. It'll be all over the place. So just looking at this here, this is insane. So this is an example of what you don't trade. You don't participate in the market when it looks like this. You participate in it when it looks like what I just showed you on the NASDAQ stuff. And then there was a question about correlation. Thank you very much. There was a question about correlation. If I find all the Aussie charts, Australian dollar charts are just trending like crazy, I can divide my risk between them. I like to take all the trades. If I have 3 or 4 trades that are all occurring on very correlated charts, I will participate in all of them, but I will reduce my risk, because sometimes one will do a 3-to-1, sometimes I'll do a 1-to-1, sometimes I'll do a 5-to-1, and I can't predict which ones. So I will split up my risk and I'll participate in all of them. That's my approach to correlation. Correlation to me means this market knows where it's going. It's really, really, really strong. And I don't worry about gold and gold correlated to the, you can get, please take note of what I'm about to say now. You can get a strong US dollar, you can get gold increasing in value, you can get a strong euro and a strong pound and strong stocks at the same time. You can completely get that. So don't ever let anyone tell you, oh, no, they're inversely correlated. That's complete crap. You can have a demand for gold even as the US dollar is getting stronger. You can get a demand for gold even as stocks are getting stronger. You can get that, but you'll see it. If you see stocks are climbing and the dollar's climbing and the gold's climbing, then just trade in line with that. Don't ever let anyone tell you that your eyes aren't seeing what they're seeing. Okay, I'm not sure what to suggest about the link. I'm going to hand that over to Oren, I think, to follow up with all of you guys who want the link. We have your email addresses, so if it's okay with you, we will email you the link as a subsequent, for those of you who are struggling with it. Okay, we'll come back to you afterwards. We'll get in touch with you. Remember what I was saying about this, the whole idea, if that's okay with you, okay? And that's really to assist you if there's any difficulties with that. So I feel like I've chewed your ears off, ladies and gents. Any other questions that I've left out that you need me to answer? But that's it. Cool. Okay. Yeah, please, let's go back to that last slide. If you have any other questions, I'm sorry, I threw a lot at you. What I want you to take away from this is a learnable skill. I also want you to realize that the whole point of this was to direct you to quality stuff. Forex Live, get a lot of fundamental feedback and news info that you need, that you want, to what causes whatever disrupts the market. Any stuff you need to be aware of that could disrupt a trend. I want you to consider stocks. I just want you to look at them. You don't have to trade them. Just look at them. Just consider them as joining them as part of your portfolio. You don't need a lot. What you need is high probability, safe trading. It's not a challenge. You're not a winner because you said, well, I'm going to pass on a really easy, strong trend on Apple and I'm going to trade euro dollar because it's going sideways. That doesn't make you a winner. That makes you kind of silly. Your goal here is to make money, and your money comes from safe trading. Don't make it harder than it has to be. And I know that sounds counterintuitive because you've been paying the price so far because it's tough, but that's what you got to do. So, okay, good. All right. So please email through to that community website address that I sent you, community traders at traders.expert that I sent you. I'm going to copy that across and put that here, and I'm going to beat my dogs as soon as the camera's off. I'm going to just talk to my dogs. So I'm just going to send that through to you. But that's it. So ladies and gents, can you use both NT4 and NT5 with your same broker account? You know what? I think possibly, but it wouldn't hold me to that. You'd need to check that out. Community at traders.expert. That's your email address. Okay. Yeah, I will. All right, I will. I know I will. But they never do this except when I'm on camera. So ladies and gents, thank you very much. I'm going to end the webinar now. It's going to hoof us all out, and yeah, and I'll see you in future webinars. Thank you so much. All right, great. It's embarrassing.